Hi, Wayne Haney here, licensed insurance counselor with Haney Farm Bureau, bringing you episode 5 in my claims series. And a question that often comes up, which is extremely natural, understandable from clients, is when they're facing a claim, or maybe they can file a claim, but they're not really sure if they should file a claim, and they will often ask this question: Wayne, how much is this claim going to cost me on my insurance moving forward? I love this question. I also love the fact that, to be perfectly honest, for the longest time, I didn't really know how to answer it. And I'm coming up on my 12th year in the insurance industry, and this question has been very elusive. And so I have spent quite a lot of time trying to research and understand and talking to different experts in the field to get my own head wrapped around the answer to this question. You file a claim, what's going to happen to the cost of your insurance? And so there are two things that I want to make sure that everybody takes away from this. First, what I'm about to share varies from carrier to carrier. So there really is not a one size fits all um, exactly piece of advice or answer to this question. And secondly, it is extremely complicated. It is not as straightforward as at least I used to think and expect it to be. And I think that, but I know I'm not alone on that. There are other people who think, oh, you file a claim for X number of dollars, then there's going to be this kind of effect that we just know going forward on insurance rates. But that is really not how it works. So here we go. So, first of all, on the auto side, so with auto claims, it's not just about the amount of the claim. It's not even really mostly about the amount of the claim. It's about number of drivers and what are called claims points that get assigned to dollars that go out the door. And at least in one case that I'm aware of, there is a point assigned on claims for claims that are $1,500 or less. And then there is a second point assigned when a claim goes over 2,000. And in this particular case, it could then go to 80,000 or 100,000. It's still 2 points. So the idea that, oh, I had a partial loss on my car and it was a $5,000 fender bender fix, or my car was utterly destroyed and the company had to write me a $60,000 check. That in terms of the effect of the claim on your rates moving forward, those two scenarios are really not going to change. So relatively smaller amounts have either no or just a modest effect. You get over 2,000 in this one example, it's going to have the greatest effect, but then that's it. So, but number of drivers comes into play on the overall policy, and the claims points on the overall policy come into play. And then if it is at fault, then in some cases that can make the effect even worse. And so if somebody is ticketed, for example, then that can add to the impact on this. So the takeaway from this is that total points really add up, which means that if this is, say, the second or third claim in a short period of time, say a 3 year period of time, then that's when people may want to seriously pause and consider before they simply file their third claim or their fourth claim or their fifth claim, because it's when you've got um, multiple events in a short period of time and two or fewer drivers. Those are the times when you really want to put the brakes on and wonder what's the cost benefit of me getting some help on this claim versus having my premiums go through the roof. Okay, so two or fewer drivers and multiple events. Now that's on the auto side. On the home and commercial side, really it comes down to claim count. In other words, how many claims have been filed over the last 3 years. So it's similar to auto in the sense that if this is about to be the third or fourth claim filed, that's when, as a homeowner or a business owner, you might want to put the brakes on and question the wisdom of doing that. And then in the case of both home and auto, at least in some cases that I'm become aware of, how long somebody is with a company matters. So people who frequently price shop and jump from company to company to company, they might be saving a few dollars here and there on a month by month basis in terms of their overall premium. But if and when it's their turn to have a claim, they may find that they've lost whatever savings they had because they're considered a new client. And so when they have a claim, they don't have as much longevity with that company, which can soften the blow on the overall impact. That's my segment on the effect of rates and claims. Again, the takeaway, it's very complicated. It varies from carrier to carrier, and even within carriers changes from time to time. But the main takeaway really harkens back to other episodes in this and other topics where I have tried to help us all remember the point of insurance is really to help us with these very catastrophic cases. It's much better to have an emergency fund for the relatively smaller or even modest events that we pay for out of pocket and save our insurance for truly catastrophic things like major health injury, totaled vehicle, completely destroyed or mostly destroyed home. That's really what insurance was primarily designed to take care of so that people don't go bankrupt when they have their worst day. As always, feel free to reach out to me with questions specific to your case. You can contact me at Haney Farm Bureau, make a comment here, or find us on Facebook. I am Wayne Haney, licensed insurance counselor with Haney Farm Bureau. Thank you for listening.